Hello and welcome to the first Trader Talks, where today we are focusing on the retail sales data release out of the UK. If you are interested to see how professional traders treat this event and how you can find great opportunities in the market, then this is for you. As always, please remember that this presentation is for educational purposes only and should not be taken as investment advice. Now, our agenda for today is, well, we're going to focus on what exactly is retail sales, what markets are affected, how to look at the expected figure of this data release. We'll talk about the technical analysis, the factors to consider, and then we'll wrap it up with a summary. For those that are listening on the podcast, please do remember that you can follow along the presentation, albeit I will be discussing everything that you could see anyway. First things first then, what are retail sales? Why are they important? Well, in the UK, the retail sales report provides an aggregated measure of sales of retail goods and services over a specific time period. In the United Kingdom, retail sales are seasonal, volatile, and relatively important to the overall economy. So the first thing to note here is that word volatile. As a trader, for a lot of traders anyway, the idea of volatility can be a good gateway to potentially getting into trades. Now, with retail sales, it is a volatile release. So that means it's not also for everyone. For some people, they may want to stay away from this due to the volatility, where there are other traders who like it, who perform best when markets are moving. And this time, when this data release comes out, could well be an opportunity. Many professional traders that I know will purposely be waiting for exactly this event before executing trades. Now, for those that live in the UK, you'll probably be aware that over the last 12 months, retail sales data has been pretty poor. In fact, 11 out of the last 12 months have seen a negative month-on-month showing. Whether we get that again, we'll wait and see as we talk about the expected figure coming up shortly. Before we do that, I want to talk about what markets will be affected. As with any data release, we need to prepare. Professional traders go into these events knowing exactly what time an event is happening, what markets are going to move, which markets will move the most, and therefore potentially give us the best trading opportunities. That is our focus for today and every other release that we do over the coming weeks. Now, look, the first market that's going to move, of course, is the British pound. It's UK related data. If it was US data, the US dollar would move. It happens to be UK, so we talk about the British pound. So any pound related pairs need to be our focus here. I'm talking about the pound against the US dollar, the pound against the euro, the pound against the yen. You name it, it is going to move when this data release comes out. Also, we have the FTSE 100, the main equity market traded in the UK. So therefore, for those that trade the FTSE in the morning, you need to be aware that actually before volume usually picks up at 8 a.m. on the open, an hour before that at 7 a.m. UK time, you have this data release and that market that you trade may well move. Also, we've got to talk about the bond market. Gilts will move here as well, as rate expectations could change drastically depending on how good or bad the retail sales number is. Also, and probably less talked about, is commodities and crypto, but importantly, that are priced in pounds. So gold, which is usually priced in dollars, as well as oil, for some people, it is priced in pounds. Now, if the pound strengthens, these commodities are going to come under pressure and vice versa. Same for crypto. Also, with retail sales, we need to think about what individual stocks might do well. In this report, we may well see that hospitality did very, very well. So then we can look at what individual stocks related to hospitality did well and how we can take advantage of that. Now, that's really covering the affected markets there. Any really, really good and consistently profitable trader will be very well aware of what is coming out, those data expectations. They need to know the time, we need to know the previous number, we need to know the range. All of this builds a picture for us, and then we can execute according to what actually happens. So first things first, what time is this event? For those in the UK, it is 7 a.m. Okay, we also need to start thinking about that there is more than one data release at this moment. When there's more than one data release, it just increases the chance of volatility, as each data release may not show you exactly the same thing. In this case, we have the retail sales number month on month and year on year, and also the retail sales number excluding fuel. Now, as we know, fuel is quite a volatile point of the retail sales. So some people like to see how it would look like if we took that out. So we get the month-on-month figure for both of them and the year-on-year figure. Now, off that headline month-on-month figure, we're looking at minus 0.5. So that would actually be the 12th negative reading out of the last 14. But remember, this is already priced in. So while on the face of it, it's a pretty bad number, if it does come in at minus 0.5, well, the market expected that, and we will not actually move. So the important thing here is to think about the low and the high end of the range. The biggest moves we get in markets are when we get the least expected, i.e. a break out of those ranges of what people actually think. Now, the ranges are generated from analysts across the globe, or whoever looks at whatever data set, giving their opinion on what they think will happen. In this case, we have the low end of the range at minus 0.8 and the high end of the range at 0.4 positive. For the biggest move, for the best opportunity, we need to see a break of that range. And that goes for the same thing across the month-on-month and year-on-year figures. Those ranges kind of control our expectations. The bigger move happens when we break out of that. Now, things to consider here from the key points is that it is early in the day. So for those that usually trade FX or indices, a lot of traders will really get into the market after 8 a.m. as volume starts to increase. Here, however, we need to bear in mind that an hour before that, at 7 a.m., we have a data release that could, if it's wildly out of line, dictate price for quite some time. So we need to be aware of that. Top traders know when everything is coming out, and they know when they want to be in markets, but also, as importantly, when they don't want to be in markets. It's a volatile data release as well. Make note of those low and high end of the ranges of all data releases that you want to trade, but specifically this one. Now, the next point I want to touch upon is the technical analysis view. For those that are listening on the podcast, again, remember, you can click and follow along to the video. However, I'm still going to talk about the key levels that we need to be aware of anyway. So you can write those down or refer to this at a later point. Now, for me, as a day trader, there are certain markets that I would focus on more than others. I specifically would want to focus on the pound against the US dollar. This is the most traded currency pair of them all when it comes to the UK. So that's going to be my main focus. I'm also going to be looking at the FTSE and then probably the euro pound and the pound against the yen. They're all liquid. I'm not going to struggle to trade these, and they trade quite cleanly and respect technical levels quite well. Now, as I focus on the pound against the US dollar, I really want to find out where the bulls and the bears are going to be fighting over. This is how sentiment can change. Now, when I look at the pound against the US dollar, I'm immediately drawn to a level at 118. For me, this is the battleground. This is where those that are bullish the pound need to defend, i.e., if price gets there, they need to step in. Buyers need to send the price higher. However, and if this data release is a lot worse than expected and people sell the pound and we end up below 118, well, that really changes things going forward. That battleground that I mentioned is owned by the bears, and price can easily start to come lower. Now, what was quite interesting last week, and those that do trade quite regularly will be very well aware of the short around 122.60, an amazing opportunity where support turned to resistance and people managed to make really good profits of that. But that still remains a very key level. If I'm sitting here and then I see a very positive data release and price pushes higher, I'm thinking, If we break 122.60, the bulls are well in charge here. This is great for sentiment. And then we can start thinking about the high from this year and the high from last year. This data release has the potential to move markets quite considerably. Now, I'm not saying it will, but it has the potential. And same thing with the FTSE as well. Yes, we're on all-time highs right now, but what do we need for that to continue? We want to see signs that the economy is doing well. So if we get a really good number and we continue higher and we break above that all-time high, well, sentiment is going to remain very strong. People are going to see that we keep making a new high. However, if we get a really bad number and we start to move below what is currently support, previous resistance, in and around 7,945, sentiment starts to change as well. So at any time when I'm trading, I'm marking up my key levels. Where do I think the buyers need to defend? Or where do I think the sellers need to defend? Because at the end of the day, the market is an auction. Price will go higher or lower because more people are buying or selling. Now, we have this data release. We can wait to see whether it is good or bad and then trade accordingly. It's going to be really interesting to see this. But do remember the time that it is coming out. It's early in the morning. And if the data release is completely in line, the truth is there probably isn't too much of an opportunity. But let's now talk about those factors we need to consider. The ranges of the number, the trend of the recent data. I mentioned at the beginning that the trend of the recent data has been pretty poor. When you trade data releases to get the best opportunity, which as traders we want, we need to think what's going to create a headline. So we would want to see the highest retail sales data in 1 year or the lowest in 1 year. That's what's really going to get the headlines on the Financial Times, on Bloomberg, on Reuters, on Twitter. We need to see a break of that range, a headline number, a difference to the recent trend. As with anything, we always need to think, has there been a revision to the previous month's data release as well? It's a volatile reading, and sometimes they needed a little bit more time to get the correct data, and this is their chance to let the market know. We also need to consider mitigating factors. When dealing with a volatile data release like retail sales, sometimes there can be a reason for a good or bad number. Recently in the UK, there has been a series of strikes, which were kind of considered a little bit of a one-off at the back end of last year. So that's a mitigating factor. The data comes out, we hear from officials from the Bank of England, they say one thing, the market accepts it, and we move on. We also need to think about how this changes rate expectations. What can happen with retail sales number, whether it's good or bad, is that it has an impact on the GDP number, which in turn can have an impact on what the Bank of England look to do as well. Also, just to wrap things up, we need to be aware of that initial market reaction. If it's contained, if the data release doesn't break out of that range, there's no harm in saying, you know what, I'm not going to trade it. But remember as well, the first reaction is going to be algo generated. Do not feel you need to jump straight in. If the data release is wildly out of line, there will be opportunities. You just don't need to jump in straight away. Take time to take in all the information that is available to us, understand the correlations that are at play, know what markets people are focusing on, and think about the time of the day as well. I hope you enjoyed that. This has been Trader Talks, and I've been your host, Sam North. I will catch you next week.